Alright, so welcome back to another video. In this video, I will be discussing about breakaway gap. So, what is a breakaway gap? First, it is a fair value gap that is unbalanced. What do you mean by that? It means it is a fair value gap that we don't want to see price retraced back into. It is a fair value gap that we don't want to see price get rebalanced. We want to see it left open. Alright? Next, it signifies energetic price movement. It means that the price has gone up higher or has gone down lower with very big candles, and the price will not go back into those fair value gaps. Alright, like I said, we want this fair value gap to remain unfilled. I will explain to you why this breakaway gap is significant. Alright, so this is a breakaway gap. As we can see right here, we have our first candle, our second candle, and our third candle. We have here our breakaway gap. This is simply a fair value gap that we don't want to see price retraced back into, or the price will most likely not retrace back into. As we can see right here, we have a fair value gap. When the price shoots up higher and left it open, this is now a breakaway gap. I will explain to you exactly how to anticipate this breakaway gap and how we can leverage this breakaway gap. Alright, so what's exactly the use of a breakaway gap? Is it really necessary to know this concept? Alright, so this is a breakaway gap. What is the use of the breakaway gap? Number one is to identify valid fair value gaps. What do you mean by that? To identify valid fair value gaps. Of course, in price action, most of the times we left fair value gaps. If we know exactly what's the difference between fair value gaps and breakaway gaps, we can know exactly which fair value gaps the price are most likely retraced back into. Alright? So, for example, like this, we have fair value gap right here, and another fair value gap right here. For this example, we can know exactly which fair value gap the price are most likely going back into. Alright? So, the next is to anticipate next market movement. Alright? Knowing when the breakaway gap has occurred, we can know exactly where the price is going. I will show it to you in the next slides. Don't worry. So, when can we expect a breakaway gap? Alright, it is often associated with the break from consolidation or time distortion. Alright, breakaway gaps mostly happens from an explosive movement right after consolidation or time distortion. We are going back once again to the accumulation, manipulation, and distribution. When we have accumulation, price consolidates, right? We are just moving sideways. Then the price will manipulate into the wrong side of the chart. Then after that, we will have distribution. That is the explosive price action. And at the bottom of the impulse move, we will have a breakaway gap. We don't want that fair value gap to be retraced back into. I will show it to you in the next slides to come. Also, we expect a breakaway gap when we are in close range of a liquidity or an imbalance. You'll understand more in the next coming slides. Alright, so here are 3 ways exactly how to identify a breakaway gap. Alright, so here we have 2 types of fair value gap. First, I want you to observe if you can see any difference from this 2 fair value gap. I will give you around 5 seconds if you can spot any difference. Alright, so what do you think is the difference between the 2? You might notice this third candle right here. So, what do you think is the fair value gap that we are most likely retracing back into? Which is the breakaway gap and which is the fair value gap? Alright, so this is our breakaway gap and this is our fair value gap. So, how are we able to identify that? Alright, using the third candle. This is the secret sauce to using fair value gap. With this knowledge, you will be able to identify exactly which fair value gap we are going to retrace back into, or are we going to continue higher. Alright? So this is the breakaway gap. As we can see right here, we have our first candle. This is the low of the fair value gap. Our second candle will most likely create the gap in our fair value gap. And the third candle, this is the most important in this fair value gap. It will dictate if we will have either fair value gap or a breakaway gap. In here, in the breakaway gap, as we can see, the price closed higher above the second candle, right? It means it's likely to go higher, meaning this fair value gap is likely to be left out. Yes, exactly. With this knowledge, you will be able to identify which fair value gap are going to retrace back into. So, this is the normal fair value gap. In this candle, we have the low of the fair value gap. Second candle will create the gap in our fair value gap, and the third candle will dictate if it's a breakaway gap or a fair value gap. And this time, the price wick above and closed below, failing to close above the second candle. So what do you think the price will do? The price will most likely retrace back into this fair value gap right here before going higher. Yes, exactly. Do you understand it now? We can know exactly which fair value gap we are going back into. Yes, with this knowledge. This is just the first step to identifying breakaway gaps, the candle formation. Alright? Alright, so this is another example for bearish price action. As we can see right here, we have our first candle creating the high of the fair value gap. Then the second candle creates the gap for our fair value gap. And then the third candle will dictate if we are going to have normal fair value gap or a breakaway gap. In this example, as we can see, the price closed down below the second candle, meaning this is a breakaway gap. This fair value gap is most likely to get left out and not retraced back into. Alright, so this is also another way of identifying breakaway gaps or how we are going to use it. Right, so as we can see right here, we have the first candle for our fair value gap, right? It created the low of the fair value gap. Second candle, the gap for our fair value gap. The third candle will dictate if we are going to have a normal fair value gap or a breakaway gap. As we can see, the price closed above the second candle, which means this is a breakaway gap. Alright? The price will most likely not retrace back into. The price will most likely go up higher because we have a very near buy side liquidity right here. This is our second way of identifying breakaway gap. We have a long hanging fruit. We have a very near buy side liquidity. As we can see, the price failed to retrace back into this fair value gap because this is a breakaway gap. Price continued to go higher, right? This fair value gap has the possibility of now being retraced back into since we have targeted a nearest buy side liquidity. Alright, so this is the third way to identify breakaway gaps. Alright, so as we can see right here, we are overall bearish, right? As we can see, we have order blocks right here. When we are bearish, we want to see price respect up close candles. As we can see right here, we have our order block. Order block is overlapping into this very first fair value gap. Alright? This is our first line of defense. This fair value gap overlapping with this order block. Now we have this fair value gap. This fair value gap is a breakaway gap. How? First is we have this candle that closed below the second candle. Also, we have these two line of defense. Alright? We have this fair value gap and this order block. We want to see price respect this area right here and continue going lower. This fair value gap should be left open because we have two lines of defense right here. Alright? As we can see, this order block is overlapping with this fair value gap. The price respected that fair value gap and continued lower. Order block, fair value gap, continued lower. Alright, so that's it for this video. I hope you learned a lot. With the knowledge of breakaway gaps, we can know exactly which fair value gaps we are going to retrace back into or not retrace back into. Alright? So, if you are having a difficult time trying to grasp this knowledge, you can repeat this video as many times as you want. Alright? So, I'll see you on the next video.